Yeah, no, I got it. Good morning, good afternoon, or good evening, depending on where and when you're watching this. I'm your host, Chase Majerus, your money millennial. Lots happened the last week in the overall news world. A bunch of sweet movies came out. The stock market fluctuated like my girlfriend when she tries to choose dinner. And Category 4 Hurricane Michael bombarded the Florida Panhandle. But that doesn't seem to be the only place people are talking about the sky falling. So let's hop into the mortgage and real estate news on This Week Today, brought to you by synergyone Lending. There seems to be vast concern in the coming months in the housing industry. A decline in that U.S. housing index, rising mortgage rates, lower mortgage application trends, home builder stocks in the tank, overheated home prices, and inventories rising. Good news for some. But these headlines are prompting a lot of Chicken Little-esque reporting. Even mortgage analysts are forecasting flat mortgage volumes in 2019 and 2020 at the Mortgage Bankers Association annual convention in Washington, D.C. But please tell me, Aaron Rodgers, what are we to do?
R-E-L-A-X. Relax. We're going to be okay.
Yeah, look, the reality is there will be some downturn, but not enough to trigger this radical recession like everyone keeps talking about. So, to counter a lot of this negative energy, I'll follow up with some positivity. For the 4-week period ending September 30th, homes for sale in San Jose jumped by 86.7% from a year earlier when just over 1,200 homes were on the market. 5 other West Coast metro areas topped the list of the biggest increases in the number of homes on the market: Seattle, Oakland, Portland, San Diego, and San Francisco. Unfortunately, not every city is getting that West Coast vibe because despite these shifts, the market still favors sellers. And this is encouraging, though, for potential home buyers. You can't complain about a lack of inventory for home buyers forever and then see this trend and be a hater. This means more American dreams are going to become reality. Come on, people. Now, when I hear the word delinquent, it reminds me of an endearing term that my mom used to use with me when I would run around the house screaming Blink-182 lyrics. But to you, it might remind you of a borrower failing to make payments on a loan. Oh my gosh, it's so funny you should mention that because CoreLogic recently said that U.S. foreclosure and mortgage delinquency rates fell to a 12-year low in July. Nationally, only 4.1% of mortgages were in some stage of delinquency in July. But the U.S. may experience some foreclosure hotspots in the coming months, depending on that damage dealt by recent hurricanes and fires and even lava in Hawaii. So let's see if you can connect the dots. Full employment in the economy, tighter credit guidelines for several years in a row on mortgages. I get it.
Well, I get it. It's very clever.
It's the economic calendar update. Let's see the board. Okay, a housing market index and jolts on Tuesday. Mortgage applications, housing starts, and the FOMC minutes, which people will be paying attention to, on Wednesday. And Friday, existing home sales, which again, people are going to be checking this data. So don't be one of those people who aren't on the information train. That'll do it on This Week Today. To learn more about the awesome company that makes this show happen, check out s1lending.com or download the app S1 Connect, which is super easy to use, and you can get pre-approved online. I'm your host, Chase Majerus. You can find synergyone or myself on Facebook, Twitter, Instagram, or LinkedIn. Go crush it this week.